Good afternoon, everybody. Welcome to the latest Brinker-Simpson webinar concerning what started as the CARES Act and has evolved into much more than that. Today, we're going to concentrate. We're going to let some people sign on. We have a lot of people joining today, and we're going to limit our discussion today to the ERC, the Employee Retention Credit, which was originally part of the CARES Act. And was enhanced by the CAA in December. So we'll start from the beginning with it. We're going to work our way through it. It is like most of the government acts that come out, there's a lot of ambiguity in the rules. There's a lot of things that need to be discussed and determined. There's subjectivity in what the determinations are sometimes. So let's. The
main key is to try to determine eligibility.
Yep. Yeah. If you are able to determine that you're eligible for this credit, we're going to show you an example of a client of ours who is going to get about $800,000 of tax credit based on his eligibility. He got a PPP loan originally. He's not eligible for the second loan, but he will be eligible for these credits based on a reduction in his revenue in 2021. Do we know that they hear us?
Yes, everybody.
Okay, we're in a new studio.
We're getting messages that we look great, so right. You especially, they said, oh. Okay. Right. Just give another minute.
Okay, we're going to give one more minute to get on to make sure that everybody gets a chance to hear us from the beginning. Where we started.
From the beginning.
This is what we're going to talk about. This isn't in my slide package.
What is that?
This thing.
That's the last page. Here it is. Yeah. It's a little tense in here today.
Yeah, a little bit of fighting between Kelly and Ryan here this morning. Something to do with our makeup. But.
All right.
Anyway, but we love each other. We get along really well.
Yeah.
Fight afterwards. Anyway, are you ready?
Yeah.
Okay. Okay. Let's get started. We have over 125 on the webinar today, so welcome to everybody. Anybody who's new to the process here, welcome to them especially. Brinker-Simpson is a certified public accounting firm based outside of Philadelphia. We are a firm of 50 people. We have a tax team here. We have a strong audit team. We have outsourced accounting and managed accounting services with fraud and forensic investigations going on now, sadly. Litigation support team and evaluation team as well. Been around for 30 years plus now, and a strong part of the community. Our clients are typically companies that are either pre-revenue and go to 50 million, or our sweet spot of clients is at the $10 million revenue range. We have emerging business group here that'll help companies that are pre-revenue, that are getting financed, that are getting equity of some kind. So all types of services, and great continuity here. Firm is full of energetic, passionate people, and we enjoy working with our clients. We hope that if you're not getting the service that you deserve with your CPAs, please reach out to us. This is a public service for us, so the participants today are clients of ours, and they're people who are clients of other firms, and we have CPAs from other firms who are on here as well, who we've spoken to. And we hope that they're able to share the information they get today with their clients too. So let's, today is just, so we're going to limit today's discussion to the Employee Retention Credit, ERC. It's the new acronym that we're going to use today. And we'll discuss how important the ERC has just become in the last week or so. a disclaimer up on the board there. So we're not offering advice. We're simply trying to guide you as best we can. And we do recommend that you reach out to your accountants and attorneys and other professionals to help them through the process. We deal with several local banks in the area here and some larger banks as well. And if you're having trouble with your bank, please reach out to us, because we're able to connect with some great banks in the area here. PPP has always been the popular thing that's been going, we've heard about. We're not going to talk about PPP today. But PPP and ERC are similar. So here's a couple of house cleaning things here. Please use the Q&A to ask questions. You know how that works. We stay on until we answer every question. That's our MO, and that's what we'll continue to do today. If you want to wait to ask questions until the end, because a lot of the questions will get answered as we go along. But please stay on. We try to wrap this up within an hour. If we don't have, if we need more time, we stay on until all the questions are answered, and all the questions are answered live. If you have a question that's specific, we'll ask you to email us, and we'll give you all the email information at the end, because sometimes the questions are going to need a little bit of research in this. This is all new for us as well, and you have to understand that I spoke to a client who didn't have us as his CPA, and he was working with his CPA, and he reached out to us, and I was talking to him, and I said, "Has your CPA helped you?" And he said, "Well, I called my CPA and I asked him about the employee retention credit." And he says, "I don't know anything about that. It's just too brand new." And it is totally brand new. But it's very lucrative. The PPP and the ERC are federal programs that are designed to get money into the businesses who need it. PPP had round one, which was very successful, gave away $600 billion of loan money, that most of it's being forgiven, and tax-free, which are some of the things that happened later in the program. ERC is a federal tax program that actually came out with the original CARES Act back in March of 2020. But one of the conditions of ERC was that if you received the PPP loan, you were ineligible to receive the employee tax credit. That's changed now, and it's changed retroactively, and that's what we need to learn today. So that if you did get PPP money, you are now eligible not only for credit going forward into 2021, but you're also eligible to go back in 2020 and compute whether you are entitled to that credit or not, based on the eligibility requirements of 2020. So one of the disqualifiers in 2020 was, if you received the PPP loan, you were not eligible. Now that disqualifier has been removed. So even though you got PPP and maybe PPP2, you still qualify for the ERC based on some economic conditions that occurred. There's some conditions, there's criteria to be met for 2020, and there's criteria to be met for 2021, which are different from each other. If you read into this and you pay attention to this and you think about it after you read it, you scratch your head a little bit, but you really understand that the federal government is trying to give you money to keep your people employed. That's what they are trying to do. And this program, the PPP program was great because it was a retention program, but they also allowed you to use that money to pay other expenses. This program is strictly a payroll retention program, and they are giving you money to keep your people employed. And the way they're giving you the money is they're giving you tax credits, allowing you to use those tax credits against your payroll deposits to reduce those amounts by the tax credits. We'll go through all of that. But the government, if you think about it, the government is trying their best to give you money to stay in business through these programs. Employers are winning through these programs, and you'll see how employers of suffering companies can win in the ERC program. So what is it? And we have the slide up there to tell us what it is. It's a tax credit program that came out in 2020 and was enhanced in 2021. In 2020, if you had a quarter where your gross receipts or gross revenue declined the same quarter of the prior year by 50%, then you qualify for the ERC in that quarter and every quarter going forward until your receipts rose to the 80% of the prior quarter level. So you need it, you need it, and you still need a 50% decline in one quarter of 2020 in order to qualify for a retroactive credit in 2020. If you don't meet the 50% reduction, then you can't apply for the credit unless you meet the second criteria. And the second criteria is, we'll go through this in more detail, is that your business was closed in full or in part by government action that limited your business and still may be limiting your business into 2021. So if your business was closed at any time during 2020, partially or fully, and partially is very important here, then you qualify for this credit regardless of your receipts. So there are two criteria. You either are down by 50% in a quarter, or the government has closed your business for any period of time during 2020. If they closed your business during that time and then reopened you fully, you only qualify for the credit during the time that you were closed. If they closed your business and opened it partially, and you continue to be partially opened, like a restaurant in Pennsylvania or a restaurant in Philadelphia, then you are continuing or you are continuing your eligibility for this credit. Your receipts do not have to be down if the government closed your business. Now, it's likely that your receipts are down because you're closed. However, we do have a restaurant client in the suburbs whose second quarter or third quarter of 2020 actually matched its third quarter of 2019 because of his enhanced outside dining, his enhanced delivery, and pickup through the pickup groups. So his receipts did not go down. However, his business, his inside business, was still closed because of government action. He still qualifies for the credit. There is some definition with the government as to what's the impact on your business of the closure, but there's no defined material that says your receipts have to be down in order for you to get this credit. There's a term nominal that the government has been using, which is a very subjective term. And some of the statements that come out say that if you are nominally down, you may not qualify for this, but there is no definition. There is no criteria for you to prove that your business was down if your business was closed by a government statute. Here's the chart as to what happened in 2020 versus 2021. So you'll see that the CARES Act and the CAA of 2021, we talked about the PPP borrowers, so they are now eligible. The maximum credit in 2020 is $5,000 per employee for the year. The maximum credit in 2021 is $7,000 per employee per quarter, and the act extends through June 30th. So the maximum dollar credit per employee is $14,000 for 2021. Eligibility, we talked about the decline in business. In 2020, you needed to be down by 50% in a quarter to qualify. In 2021, you only need to be down by 20% in a quarter to qualify. And since we're only in January, we really don't have a quarter to measure. So the government has allowed us to go back and take the fourth quarter of 2020 measure it against the fourth quarter of 2019, and if you're down by 20% in those two fourth quarters, then you qualify for the credit going forward. You can use that as a qualifier. If in 2021, your business for the first quarter of 2021 is down by 20% over the first quarter of 2019, so we're going back 2 years now when you were in full service. If that's down by 20%, then you get the full credit and you continue through the second quarter of 2021 with the full credit, regardless of what happens in that quarter. This act is cut off at June. As of now, there is talk that it will be extended. So 2 criteria that you need to look at from a receipt standpoint, that if your business was never closed by a government act, like us, we were never closed. One day, yeah, we were closed for 1 day. If you were not closed by an act, so you were an essential business, we'll talk about Pennsylvania and what Pennsylvania did. If you were an essential business and you were allowed to remain open fully through this whole pandemic, then you have to meet the receipts test. If your business was closed in any part by a government act, hairdresser, car dealer, builder, restaurants, catering halls, comedy clubs, venues, any of those places that were closed because of a restriction on either indoor or the number of people who were allowed into these events, then you don't have to meet the receipts test. It's likely you do anyway, but you don't have to meet that test in order to qualify for this credit. The eligibility due to government order we talked about. Employee threshold of wages. So in the CARES Act, you were limited to people that had 100 employees and below. The CAA of 2021 raises that limit to 500 people or 500 employees. And I think there's also some raises on what's eligible for compensation going forward.
You couldn't increase someone's pay in 2020. There was a 30-day look-back period, and that's been waived for 2021.
Right. So you can raise wages. You're going to see that there's limits per employee. We just showed that it's $14,000 maximum per year, which is $7,000 maximum per quarter. The wages are at a 50% computation, or 70% computation for 2021.
10,000.
So anybody that has wages over $10,000 is limited to $10,000 of wages. So any of your employees that are on a par to make $40,000 annually are probably going to hit that limit in the first quarter if their pay is steady. If those people are under $40,000 and you're thinking about paying them more, then you would include the higher pay up to the $10,000 in the first quarter. It might be a good quarter to give raises to people who are below that amount. So let's move to the next one. Why do I care about this? The reason is this is a refundable payroll credit. If you understand what a credit is as opposed to a deduction, a credit is a dollar-for-dollar reduction of a tax. So you can, and refundable means that if your credits exceed your tax, you can get the excess. And it can happen, and it will happen for an example we show you. So credit is dollar for dollar. You apply these credits against your payroll tax payments, so you simply reduce your 941 amounts through Form 7200, which is the same form that was used for your family leave and coronavirus leave credits, if you had any of those last year. You get the credits that way. You arrange this through your payroll service. And if you're using an outside payroll service, which we recommend.
I don't think they're going to be doing it very well.
Yeah, well, we hope.
It's not going to be as easy as
Right.
family leave.
We hope that the payroll services are ready for this. We don't believe that they are, especially anything that's retroactive.
And anything that includes a PPP calculation. That's where they're going to struggle.
Yeah, so there could be some struggle, but please get with your payroll service if you qualify on any of those two eligibility requirements because you're going to do this through your payroll service, and you're really going to tell your payroll service how much credit you're entitled to. You're going to do the computation, you're going to give the credit to your payroll service, and you're going to reduce your 941 tax payments, including the matching Social Security amount, by these credits. There is no criteria at this time that says you have to file anything if your receipts are down or if you're closed by statute. There's nothing in the law right now that says you have to prove that. It could come back and ask for it at some point, but as of now, if your receipts are down by 20% for fourth quarter 2020 over fourth quarter 2019, you're simply attesting to that with the federal government when you file your tax credit forms. There are no forms that go in for this. In addition, if you're closed by statute or if you're reduced by statute, there's no forms that go in to attest to that either. This is right now, it's a voluntary compliance program that you're going to go in and take these tax credits starting next week if you're eligible. So that's how the credit's going to work. Let's go to the next one.
And the point of the information on the right is that all that stuff was so confusing with PPP, so people are a little tentative about these programs because of the chaos of the last year. So the ERC, once you determine eligibility, which is the hardest part, it's a simple calculation that doesn't have the same challenges of the PPP.
All right, so section 206 of the code is retroactive to March the 12th of 2020, which is when I guess that was the beginning of the closures, March 12th. These are important. We bolded some items here. These are important if you're going to do anything retroactively. The PPP borrowers who would have otherwise eligible, who already filed payroll tax returns, can elect to treat any credits paid after December 31, 2019 till October 20th as being paid in the quarter the act was enacted, the fourth quarter of 2020. However, that was delayed, of course, and now we're into March. Most employers will want to wait and amend the tax returns, quarterly tax returns for 2020 once all of the guidance comes through. PPP borrowers should carefully analyze and compute the amount of wages that should be reflected on a forgiveness application that allow for the maximum ERC credit. If you already applied for forgiveness for PPP, there is no guidance right now that you can go back and amend that forgiveness application. If you used all payroll to get forgiveness on your PPP, which was easy because you had 24 weeks to forgive 8 weeks worth of payroll, essentially. It was very easy to do, and one of the reasons that we recommended strongly that anybody that had a significant PPP loan wait for forgiveness. Don't send the applications in. Not everybody listened to us. I know there's some of our clients did their own applications for forgiveness, but if you have not done your application for forgiveness yet, you want to go back and make sure you use the minimum amount of payroll to get forgiveness on the PPP loan, which really is that 60% of your PPP loan money has to go to payroll and payroll costs. The other 40%, if possible, can be used to pay other costs. And if you were on our webinar 2 weeks ago, you realized that those other costs were expanded significantly to include IT costs, to include supplier costs, accounting fees, and other expenses that were not in the CARES Act for forgiveness. So very important that if you have not done your PPP forgiveness yet, don't do it. Hold off. You have 10 months from the end of your PPP period, which is your 24-week period. You have 10 months from that last day to get your forgiveness application in. If you spent the money where it was supposed to be spent and you get your application in within 10 months, and if you don't get it within 10 months, then you didn't deserve the money anyway, then you will be forgiven. Forgiveness is happening. There are companies that are being forgiven quickly on these loans. It is tax-free, so that's not going to change. any farther. But if you have not done your PPP application for forgiveness, don't do it now. First thing you want to do is determine whether or not you're eligible for this ERC for 2020. How are you eligible? We'll go back to it. Receipts were down by 50% for one quarter, or you were closed fully or partially by a government act. Once you determine your eligibility, then you can move forward and do the computation using payroll that does not have to be used for forgiveness. You only have to spend 60% on payroll from your PPP. That other 40% is totally available for this credit if you qualify for it. There are ordering rules. You'll see in this last column here, you must do the ERC wages first before you even do the wages that are eligible for PPP. But you got to do it side by side because you got to know what's going to be used to get that loan forgiven. Very easy computation, but be very careful about it and do not do your forgiveness at this time. That's the biggest thing. Determine your eligibility. If you're eligible, don't do your forgiveness application.
I think that if you take away one thing from the webinar, it's the determining eligibility and then making sure you're going to spend some time figuring out the forgiveness application and your ERC credits for 2020 and 2021.
So in 2021, Section 207 is addressed, and 2021 now reduces the amount of income decline from 50% to 20%. It raises the threshold for employees from 100 to 500, and it's effective through June of 2021 with the hopes that it gets extended. And it increases the credit. So the credit in 2020 was 50% of the first $10,000 of wages that you pay per year, limited to $5,000 per employee per year. In 2021, that's been raised to 70% of the first 10,000 wages you pay in a quarter per employee. So you can get a $7,000 credit for the first quarter, and if you qualify, a $7,000 credit for the second quarter. And you can go back and use the 2019 fourth quarter versus the 2020 fourth quarter to determine whether you have the 20% reduction in receipts. And again, if you're a company that was closed by statute, you don't have to do a receipts test. You only have to be closed or partially closed. So any restaurant, at least in Pennsylvania, I know some states didn't have closures, but in Pennsylvania, any restaurant qualified in 2020 still qualifies in 2021 because they're not fully open. Gymnasiums, health companies, hairdressers, spas, car dealers, all of those companies still may be under a statute that they can't go back to full operations. So if you're in one of those, you automatically qualify for this. You just have to go in and do the computation. The other thing is that they are you can elect to take an advance on this credit from the government that will be wired into your bank account. We haven't had anybody do this yet, but it's supposed to work.
They don't have the form yet.
Yeah, they don't have the form, that's why. But if you go back to your payroll from 2019 and take 70% of the average quarterly wages for 2019, that amount can be advanced by the IRS into your bank account in order for you to make payroll going forward. You're not getting a credit for it because you're getting an advance on it, and you do have to square up the advance to what the actual numbers will be for the first quarter going forward, because nobody knows what their payroll is. The government would rather you estimate your payroll this year in order to get the advances, because many payrolls are much smaller than they were in 2019. But you can go back to a 70% computation from your 2019 average payroll to get a credit advanced for this year. We're going to see how that works. That could be really tricky.
That's just the maximum. If you're not going to hit that number, I would not play around with payroll deposits. So don't be too aggressive.
Don't be too aggressive on that. All right, so let's talk about eligibility due to full or partial suspending of operations. Operations suspended for purposes of employee retention credit. Appropriate government authority imposes restrictions on an employer's operations. You have to hit all three of these tests. So an appropriate government authority imposes a restriction on an employer's operations. The order limits commerce. Buying and selling is commerce. Travel or group meetings for commercial, social, religious, or other purposes due to COVID-19 and the orders affect an employer's operations of its typical operation. Couldn't be more vague on number 3 there. All 3 of these criteria have to be met. Now, up on the screen, we're going to have a little bit of fun, and we're going to talk about a couple of circumstances here and read these examples. So a restaurant must close its restaurant on-site dining due to government order closing restaurants. Government order permits food or beverage sales to the public, delivery, pickup, and drive-through. Would they qualify for this credit? Yes or no? Is anybody voting, or are we voting?
Everybody should vote. These are the major issue with this is everyone is going to try to make the case that they were meeting this criteria. Right. So a bunch of dorky accountants on Twitter got together and did polling, and I'm going to assume their answers, the consensus, is the closest thing to correct. So we got one answer. We got one vote, and we say yes. Yes. There is no call a friend.
Of course, if you're a restaurant in that situation, you qualify. The mayor of an employer's town holds a press conference encouraging residents to practice social distancing to prevent the spread of COVID-19. How would you feel as that? Is that a government authority imposes restrictions on an employer's operations? So we've got 50-50. So we're going in the no direction here more than the yes direction. If I was a company that suffered because of this, I think I would make the case that a mayor came out and made people socially distance, and because of that, my business suffered. I was not able to my operations were not typical because of that. I think you would lose if it was tested, but we do at least have some people that are very aggressive and say yes. Number 3, a software development located in a city where the mayor ordered non-essential businesses closed. They are classified as non-essential. All employees teleworked 1 to 2 times per week previously, and the company ordered mandatory telework after the order.
Telework is the big unknown here for everyone. That's the big case that people are going to hire consultants to try to make themselves eligible.
Yes. So somebody's going to come out and make a determination on this case, and you'll see it's mixed. So we're pretty much, could be close to down the middle here if you meet those 3 criteria because you were able to telework. If your business did not fall off by the 20%, then you're going to have to make a determination whether or not you're qualified or not. And it's a lot of money involved here. Governor order permitted salons to limit capacity to 50%, prohibits stylists from double booking, which results in half as many clients compared to normal operations. That's clearly, in my opinion, that's a government restricting your business partially. That's all it has to be, is partially. Doesn't allow you to do your normal operations. So they meet the criteria the 3 criteria in that. A rental management company has non-paying tenants. They are prevented from evicting due to CDC and state orders. How would you feel about that?
This one had the biggest disparity among the CPAs on Twitter. So I think this one should count.
I think it counts. CPAs were arguing that it didn't count, but it didn't. It also didn't say if they were non-paying tenants before or after. So there's some ambiguity in those questions too. But these are the things that are occurring, and these are the questions that are going to be answered.
And we don't have the right answer. We just say we have the information available to make a decision that makes sense. There's a lot of gray area.
So remember these 3 criteria as we go through the next couple of pages, and we'll pace through them.
Look through that too much. What do you think?
Yeah, government orders. I think everybody's clear on what a government order is, but this describes what the government order is. You can read that. The eligibility and decline in gross receipts. We went through this pretty heavily. So we're going to talk about a significant decline in gross receipts, and here's an example of a company whose gross receipts for the first, second, and third quarters of 2020 were listed and compared to the first, second, and third quarters of 2019, and you'll see that he had a 48, 83, and 92. They made 48% of their number, which qualifies them for the ERC since they're below 50. Then they recover in the next quarter to 83%. However, recovery in that quarter is based on the information from the prior quarter. So even though they recovered in that quarter, it's not till the end of the quarter that they're disqualified. So all during that quarter, they can still get the credit. That's why if you read further down, by the third quarter, they're disqualified from taking any more credit because they restored their 50% reduction in excess of 80%.
This was a major source of our issues before this started
Yes.
here.
What are qualified wages? You can read that too. There's a lot of information in there. But remember, the wages stop at $10,000 per employee. So once they're at that number, there's no more wage to discuss. More qualified wage information.
These are important to read, but the major first step is, am I qualified? And then all of these things will come into play. There's a lot of other rules. Cannot pay the owners, brothers and sisters and sons and daughters and things like that. But the first step is, do I qualify? That's why we did the polling question, because that's going to be the most important step.
This is an example here of a company that received a PPP loan based on $600,000 of payroll. Their PPP loan was $125,000, which is about what the computation would be. So 60% of that money would have to be spent on payroll. The total covered wages during the period were $375. Eligible wages for the ERC are $110 in this example. The total covered period wages eligible for forgiveness for the loan are $265 in order to forgive the loan. This company would qualify for a $55,000 tax credit from ERC on their 941 returns.
And if this borrower filed for forgiveness and just used all the salary expense, they wouldn't get that $55,000 at this point.
Yep.
So you want to be really careful about.
You got to limit the amount of payroll that you use only to the amount that's required.
And we did not know that until December 27th.
Yep.
So.
But we had been saying not to apply for forgiveness because we knew that there was a second credit program coming around, and this is it. All right, here's our client's example, which is insane, but he has 60 employees. All the wages were paid maximum of $40,000 or for $10,000 per quarter. Gross receipts were down 20% in quarter 4 of 2020 versus 2019, making them eligible for the ERC. Each employee is paid $10,000 of wages. He gets a $7,000 tax credit for each employee in the first quarter of 2021. With 60 employees, he gets $420,000 of tax credit against his 941 tax in the first quarter of 2021, and he'll be eligible for another $420,000 in the second quarter of 2021, so long as his receipts stay down. He doesn't expect that there'll be an increase at all in their business. Their business is on a slope a little bit. So this company could rack up $840,000 of tax credit. If his payroll taxes are not $840,000, they get refunded the difference. This is all, at the bottom we explain how it's all done through Form 7200, but this is a real life example of a client of ours who is actually going to fall into this, to this category. They do not qualify for the second PPP loan because their receipts were not down by 25% in 2020.
But if they were, they would also get another PPP loan.
They could get another PPP loan that might limit a little bit of this, but may not, because the PPP loan, you got to use that for payroll for the 24 weeks after you receive it. However, in this case, they could pick up $840,000 of tax credit. And that's a real life. We're actually have a meeting with them soon. We will update that's it for the ERC. We'll go into the questions next, and we have a handful of them. PPP update, we're going to determine that. We'll have another, we're going to have another webinar on that. If anybody's read the newspaper today, you're going to find out that the SBA had disqualified forgiveness for 240,000 loans that were submitted this week incorrectly. So they denied forgiveness back to the banks. The banks went to their customers and told them that their forgiveness was denied. And the SBA yesterday found a glitch in their system that they found 240,000 loans submitted this week that should have been approved for forgiveness that weren't.
Because they changed their entire software platform from E-Tran to something new.
Right.
That was.
The other thing you want to be aware of is that some of the local banks have sold off their PPP platform to loan servicing companies. Those loan servicing companies did not process your first loan. They do not have all of your information that you submitted with the first loan. They're asking you to start from scratch with formation documents, shareholder agreements, and everything that you may have already submitted to your bank, but that bank has sold off the platform. There's some local banks that have done that. If you switched banks between PPP1 and PPP2, which a lot of people did because of their bank falling down on the PPP1, you're going to have to submit your entire first application and all the paperwork on your PPP2 application, just so you're aware. We will update that shortly once we get more information. And there are changes coming. So that's our presentation. Let's hit the questions. Handouts will be available online through our website.
People are complimenting our new look, and
yes, we got a new studio, we got new camera equipment.
I do want to be a talk show host, so
we're high tech.
It's started now.
Yeah. All right, keep trying.
Handouts are available. Yes,
if I receive ERC in either 2021 or 2020, are there any tax implications to me or my business, or the wages are not deductible? Correct. Wages used to get the credit are non-deductible. So if you get a dollar for dollar credit and you're in a 30% tax bracket, those wages that were used to get that credit, you'll lose 30% of those wages as a tax deduction. So in all credit situations with the IRS, you can't deduct the expenses that were used to get the credit except in R&D costs.
And they're very clear about the way we're supposed to show that on the tax return, because there's implications for the business, the 199 calculation.
Yes.
And
so those wages will not be deductible.
Right.
Can we ask PP2 questions? Only okay to submit a few weeks later, still submitting PPP loan forgiveness apps. Yeah. Yes. You can go for forgiveness and go for the second loan at any time. Slides are available at our website, and we'll also have this, this webinar will be taped and put on YouTube within 24 hours or so. Key question, baseline year to calculate the 20% or the 50% decline in quarterly revenue. Is it 2019 or 2020? It's 2019 is the base year that you use. So the government's giving you the benefit here of using the low year compared to the high year in both 20 and 2021. So 19 is your base year. What if you're a sole proprietorship employed and have a 1099 employee? You don't qualify for the ERC. That's an employee retention credit. That's what that is. So if you have no employees, you do not qualify for this. If the government closed our business, does this include the city of X didn't allow any construction for a couple of months on a few of our projects? Yes, that's correct. You were closed by statute. So builders in Pennsylvania were closed for a while. During that period of closure, you qualify for this credit if you kept your employees paid. Yes, slides will be available. 2021, 20% reduction compared to what? So in 2021, you're going to make a measurement of the gross receipts of the fourth quarter of 2020 compared to the gross receipts of the fourth quarter of 2029 or of 2019. So fourth quarter 2020 compared to fourth quarter 2019 determines if you're eligible for 2021.
You can elect to do that.
Yes.
You would, because if you can meet it for Q4, great, that works. If you can't, you can still test Q3 at the end of Q1 at the end of Q1.
Yes. If you suspect that your sales are going to be down by 20% in this quarter, then you can use that suspicion to go forward with this credit. Obviously, you have to meet that criteria, and if you don't, then you could go back and measure 2020 fourth quarter against 2019 fourth quarter. But if you meet the 20% reduction in the fourth quarters, you're eligible for this first quarter, regardless of what happens to your receipts this quarter only. Self-employed professional eligible for retention credit? The answer is no. Need to have employees. Does closed include working from home? If you were closed and you worked from home, you still qualify. Your business was closed. Go back and read the criteria in our slides for working remotely and see how that impacts. But if your business was closed and you worked remotely, you still qualify.
I wouldn't agree.
All right. Kristen's going to argue.
This is how they'll make the case. If an accounting firm was shut down and we never worked at home before, we had no infrastructure set up to work at home, we could make a case that we would apply. If you were a company that was already doing that and it was already a normal part of your business, then you would not qualify.
Okay.
That's where there's a lot of gray area with the telework thing for this and the paid leave.
And I think that anybody that was working remotely up to this point, it was never a normal part of your business.
Yeah.
Can credits earned in 2020 be credited in 2021? Please clarify what firms that receive PPP are disqualified in terms of credits. Let's answer the first part. Can the credits of 2020 be applied in 2021?
So this is Bob saying, you're not telling them how to get the credit, and we really don't. I can't say right now this is how you're going to go get the money, but in theory, you can reduce your payroll deposits for the 2021 rules. And for the 2020, you're going to go back and amend your 941 and take the credit there. But if you use that advance, or you use the advance form, you're just going to reconcile it because you had reduced your payroll deposit. So if I have $50,000 to make my payroll on Friday and I have a $30,000 credit, I will only then send $20,000 of cash. There's the opportunity to do it that way, and then how it will work with the amendment, I am not 100% clear. But yes, you'll get it in 2021.
So what was supposed to happen here was these rules were supposed to be in place so that you could make all of the 2020 reconciliation of credit in the fourth quarter. But of course they weren't. So by the time the rules rolled out, the quarter was over, you already paid your taxes. So now they're going to likely ask you to go back and amend 2020 quarterlies and get refunds.
The due date is Monday for the 941. So everyone's going to be amended. Yeah.
Yes, we'll help you. Anybody that's a client or not a client even, please reach out to us and we'll help you with the ERC computation.
It's not an easy calculation. It's not an easy thing. So.
Would holding off on forgiveness application include people with loans under 5, 25, or 50? It depends. You want to hold off on your applications if you have employees, if you have payroll, and if you meet the criteria of eligibility for this ERC. If you don't, and your business wasn't down, and you weren't closed by statute, then certainly go forgive your PPP loans. I mean, we're in a perfect example where our business is not down, we're not closed by statute other than one day. So our forgiveness applications are in to get forgiven. There's no reason for us to wait.
And you're only postponing until you go through and do that calculation to make sure you're maximizing the benefits of both programs.
I applied for PPP round 2. Should I wait to forgive both simultaneously? I don't think so. I think you should go get your first one forgiven if you don't qualify for ERC. We are an AV company. We were limited by the government to cross from CT to New York and MA. Are we eligible?
Need more information.
Great question. And again,
mention travel.
Yeah, the criteria seems that the government has restricted you from doing your normal business and has partially restricted your commerce. So again, this is a determination that you're going to make. So if I was the business owner and this is what occurred, I would say, yes, I've been affected by it, and yes, I'm eligible. Think of a travel agent who deals with Disney World and cruise ships and things like that, can't book trips because of government closures. That travel agent was never closed, but those companies that she worked with were closed.
Yeah.
Does that travel agent qualify for this? If I were the travel agent, I would have to talk to some very smart people to find out.
A lot of people are asking if my main buyer was limited or partially shut down, does that count? And it doesn't, but it does say that if your supplier is, then you potentially could. So.
All right, next person says they're giving up. Please don't give up.
I felt the same way yesterday.
Yeah,
so.
it works. It's
White
a little
flag.
complicated. And the next one who's anonymous says, is that example me? So yes, anonymous, that example is you. Can sub-S owners take payroll and get the ERC? Absolutely.
But not your brothers, sisters, and family members.
Right. You can't put all your family members on payroll in order to get this.
Even if they were on payroll, you can't include those.
If I'm not eligible for 2020 and won't know if I'm eligible for 2021 until after the first quarter, do I have to wait to apply for the PPP loan forgiveness?
No.
No.
But don't do the second one.
Yeah, don't do the second loan. I don't know if you guys qualify for that anyway, since you're our client, but you can, if you can look at the fourth quarter of 2020 and the fourth quarter of 2019 to see if you do qualify for that. And if you do on a 20% reduction, then you don't have to wait. You qualify. You take it now. If you think that your first quarter is going to be down by 20%, work proactively. Make it down 20%. Can't say that. Local bank equals nightmare. Yeah, I agree.
This anonymous attendee is not happy.
Anonymous. That is an owner paycheck.
Yes.
Yes.
If it's an S corp, yes.
If it's an S corp or a C corp, the owners can get paid and be a part of this credit for sure. In 2021, in your client example, do you reduce the 24-week payroll spend by the $840,000?
It depends.
Yeah, in my client example, you would take a reduction. Yes, you would take a reduction of the deductible payroll, but I don't.
Wages.
Yeah.
Only wages.
It's not a 24-week deal because that client is not in PPP2 program anyway.
Yeah, and the other thing is, if you had people that were over 100 and you couldn't include those wages, you can then make those eligible for the ERC. And then the PPP, you're going to have your healthcare costs, all the other benefits, and your retirement plan that will be included in payroll costs. So it's only the wages that you're comparing. Was it?
Matt, are the wages reduced by the credit amount or by the total wage that's used for the credit amount? By the credit amount.
Are the wages reduced by the credit amount?
Yes.
That's a good question. I'm not sure.
Yeah, we believe it's the credit amount, like other credits.
Yeah. Matt, find that out and report back to us.
Yes.
Thank you.
Will this recording be available? Yes, recording will be available.
And on YouTube. So.
All right, our business qualified for PPP2 for $2 million. We also have more than 25% of revenue decline. Can we claim the ERC for Q1 and Q2 of 2021 and wait until Q3 to start using PPP funds? I don't believe that's going to work because you have to use your PPP funds within 24 weeks of receipt. So I don't think you can wait until Q3 to get that done and get it all in within 24 weeks. But you have to figure that out.
Right.
That's a great question. I mean, it takes a little bit more than shooting from the hip on that one.
But you're only using $10,000 per quarter per person or $10,000 per person. So once you hit that, then the rest is for the PPP. It's just
right.
There is a lot of thought that has to go into the calculation and probably a crazy Excel spreadsheet somewhere.
Would home health care companies be eligible? They did not close down, but revenue for each quarter was reduced in 2020. Home health care companies were not closed by statute. They would have to qualify under the revenue reduction of 20% or 50% in 2020. They would have to have reduced revenues, but they wouldn't qualify because of a government shutdown. Companies have an ability to manage revenue in a given quarter in 2021. Would quarterly financials be used to prove a 20% reduction in revenue compared to 2019? Asked by a very intelligent, well-trained CPA. Yes. One of the sad or glad parts of this is the manipulation of data and when sales are recorded. So those are things you're going to have to work out with your accounting team and with your accountants to see what that means.
Gross receipts for PPP is different than gross receipts for ERC.
Yes, there is a defined definition of how you support your reduction for PPP. It's different for the employee retention credit. It's based on normal accounting procedures of how you record your revenue. Now, I know the business you're in, they have some long-term contracts, I'm sure. So you have to be very astute when you're recording revenue for the first quarter of 2021 and 2019 and 2020, fourth quarter of 2020. For an insurance broker, there is only one employee, but his business is down 30% in each quarter. He would qualify for the credit based on that one employee up to $7,000 a quarter in 2021 and first quarter and second quarter. So they could get, if the employee was earning $10,000 a quarter, they could get a $7,000 credit for the first quarter and the second quarter, and could go back and check. It's only 30% decline. They need a 50% decline last year. So Drake, they would get that for 2021, yes. Thank you. Can you define receipts?
For ERC, I think it's the IRC code 6033, Linda. So I think that's
yeah. Internal Revenue Code 6033 gives you the definition of how that revenue is going to be recorded. It's an ambiguous computation, but it really comes back to how you record revenue typically for your business is how you're going to record revenue for the ERC if you're asked to support your application, which, again, when you do a PPP loan, you have to send proof. If your loan's over 150, you have to send proof of a 25% decline in revenue. In this circumstance here, you send no proof, you make no attestation other than to fill out the federal form asking for the credit. Now, if you fill the form out fraudulently because your receipts aren't down, then you have other issues that we won't discuss today.
So, Linda, you also do mention the HHS payments. There is no specific guidance on it, but the consensus in the accounting community is it does count for receipts because it was considered a revenue replacement program. So that's the answer most people are going with.
So one of our favorite bankers says, I'll take martinis for 1,000. He's definitely behind the times because now it's Ken, I'll take martinis for 1,000. Thank you. If you had a mandatory shutdown, you can take it. Yes, absolutely. You mentioned that a company cannot use the spouse's sons or daughters for the credit. Can they be used for PPP? Yes. Presumably, gross receipts is cash basis for a cash basis taxpayer. How about for accrual basis taxpayer? It would be how you normally record revenue. That's the definition. So we have clients that record revenue on an accrual basis but file tax returns on a cash basis. So if one basis is a 20% reduction over the other, we're at a dilemma. We have to figure out how we're going to handle that. I have two companies with common ownership and management. Do I have to combine revenue FTE numbers to determine eligibility?
Yes.
Yes, you do.
And there's affiliation rules for PPP and ERC, and they're separate rules. They are not the same, of course.
If you project that Q1 21 looks to be down compared to Q1 2020 by 20%, are you eligible for the credit in 2021? No. Your comparison is going to be between 2021 and 2019. Now, if it's 2019, I don't know your circumstances, but that's the quarters that you have to compare. 2020 is out of play on this. We'll be able to assist you in the process. Just reach out to us and we'll be able to help you for sure. If all non-essential businesses in PA were closed 3/18 to 4/26, do we claim the credit for just that period or the whole quarter? Yes. If you were closed, if you were closed and then allowed to reopen fully, you can only claim the credit for the period of time that you were closed. If your receipts are down by 50% and you meet the receipts eligibility, so there's two eligibilities to look at. If your receipts aren't down and you were closed but then allowed to reopen fully, then you can only take credit for the period of time that you were closed. My employees are family and have been for years. Are you saying I can't count them? This is an S Corp.
Correct.
Correct.
It's very clear in the IRS FAQs.
Yes. Your family employment does not count. Your employment does. We know our revenue was down 20% in 2020 over 2019. Great. You qualify. We expect our revenue will be down less than 20% in 2021 versus 2019. Looks like we qualify for Q1. What's that?
This is a smart question.
Yeah. Would we qualify for Q2? The way we read it is
2 quarters.
You would get 2 quarters, yes.
I don't see anything that specifically supports that, but I think that's the intent, and I think that
Yes.
is how it will play out. That's a really good question.
Because here's what happens. You could be well into the second quarter before you really know what your revenue is for the first quarter. So they're giving you this, base it on the prior year, fourth quarter, to qualify for both quarters. So what we read is if you qualify for one, you're going to qualify for two, regardless of what happens in that first quarter. Sample spreadsheet. All right, we're going to put our spreadsheet team on it.
We have people working on it. It's a complicated one that everyone's circumstances are so different, but we will definitely help with a base template.
Yeah, it's in creation right now. We'll have it. Please accept that these rules were changed on Wednesday again. So
and PPP last Tuesday.
Yeah, and PPP was changed last week. So the rules are still evolving as we go. I mean, one of the big PPP issues that came about was if you were down 25% in one quarter but up 400% in the other three quarters, you still qualify for the second loan. So there's a lot of issues with that going forward. So there are going to be changes as we go here. Just like we're talking about this tax credit. What if the first quarter receipts go up? Do I get disqualified in the second quarter? As it's written right now, the answer is no. But we expect that could change. So, yeah, we're going to create a spreadsheet and we'll share it on our website for sure.
I just skipped one, I think, and I just like to answer that. It was about when to take ERC.
Take ERC 2020, get credit in 2021. Do you deduct payroll in 2020 and receive the credit as income in 2021? That hasn't been addressed, but I'm going to address it the way I think it would, is when you get the credit is when you lose the deduction. That's how credits typically work. The credit on payroll taxes is an actual payroll. It's a credit on salaries paid, not payroll taxes. If you're talking about ERC.
Well, the credit is used against your withholding taxes, but if you exceed that, you get it anyway. So it's kind of...
Yeah, so I guess the question is the credit of the payroll tax or the actual payroll? The credit is based on the payroll.
Tax.
It's taken, no, the credit is based on the payroll. It's taken against the tax.
Okay.
So your payroll is what computes your credit. The credit is used to reduce your payroll tax payments.
Yes. All right.
If your income is down over 50% in one quarter but up by 90% the next quarter, do you still qualify? Yes, you qualify for 2 quarters. You qualify for the quarter that you were down 50, and you qualify for the quarter that you recovered. You don't qualify for the next quarter. The Accountant Retention Act. Okay, yeah, thank you.
No, I think it's the opposite.
We do appreciate the government making it easy for us to increase revenue, especially when the new tax plan comes out.
And it's about to be tax season. So.
Yeah, if your employers are related to the owners but are employees of the company and file their own individual taxes, can they get ERC to meet the guidelines?
There's specific relationships, and I don't know them all, but it's sister, brother, son, daughter that are completely excluded. You cannot include those wages for ERC. They are fine for PPP.
Yeah, and even these employees were long-term employees. So what the government is doing is trying to take out that subjectivity of having a family employment. So they just eliminated it altogether. I assume the credit will not affect W-2s. It will not. It's a company credit, not an employee credit at all. So it's a good question, though, because you think about it.
I thought so, too.
You're paying federal withholding taxes being withdrawn from an employee's W-2, but you're not paying that anymore because the government's giving you a credit against it. Right. Those employees will not be impacted. They still have the withholdings coming out of your W-2. The government is paying those taxes for you. Is really what happens with the credit.
I want to know if they're paying the Social Security, really.
They are matching
from here and
Where should I look for the most up-to-date, easy forgiveness application for PPP loan under $50,000? You can go to the SBA website. They have the new applications in there.
And for under 50, it's very simple now. Yeah. You can reach out to us, and I would send that to you with a little bit of guidance, but they made that really simple.
Yeah, you can. We have it, so we can email it to you if you just send us a request. Thank you, Richard. We enjoy your comments.
This was a tough one because there's a lot of information.
Still a lot to learn.
A lot of gray area.
Are spouses excluded from ERC?
I believe so.
Yes.
There's a specific list of relationships that are excluded, but we'll put that information out when we post the recording.
So the comment is, this rule hurts family-owned businesses, which I assume employ a lot of family members. It's not friendly to that, correct? Did you say this has to be determined and reported to your payroll company by this coming Monday? No, the comment on Monday was, Monday is the end of reporting for the fourth quarter 941 form from last year. So that's the Monday comment. That's the end of the reporting period. So this doesn't have to be reported anywhere by Monday. There's no deadline on that. If you compute that you're due a credit, you start taking it on your next payroll submission.
Yeah. There was something in the act that said you could treat wages from 2020 as paid in the fourth quarter to make it easier for you, but it's not going to be available, right. So you're going to go back and amend those quarters.
So what is the PPP Forgiveness App for a $122,000 loan? It's a very simple app, a 2-pager with an attestation attached to it. Again, you can ask us and we'll send it to you. Yeah. That's very easy. You don't have to support it with anything. It
has one extra step than the under 50, which one of my coworkers was kind enough to tell me when I was wrong. So there's a little bit extra, but it's still very simple. And if you reach out to us, we can help you through that a little bit.
Thank you, Kim. We're happy to help. We use ADP for payroll. Do I need to contact them for the ERC credit? You need, when you're ready to submit your payroll to ADP at the next pay period, and you've computed that you have a credit, you need to complete Form 7200 and send it to ADP along with your payroll submission. And that will tell them what the credit is. ADP can't compute this credit, only you can. You have to tell the payroll server what the credit is so that when they go to withdraw the tax amount out of your bank account, they give you credit for the withdrawal, on the withdrawal. Two sets of married couples, are they excluded?
Email us and we'll confirm, because yes. It's the relationships are listed, and I know brother, sister, son, daughter. I'm not 100% sure on the married couples, so I will get that answer to you.
We'll find out for you. Just send us an email. If a client uses ERC in 2020, do you know how it is treated on 11/20, for example?
Yes, it's a wage reduction.
Yeah, so you're going to reduce your wages by the credit in 2021, right? Is when you're getting the credit, unless you go back and amend for 2020. Right. If you go back and amend, then you're going to reduce your wages on the 2020 corporate tax return.
Yeah. And the IRS did release guidance on how they want us to reflect that. I don't have it in my head, but we'll share that next time.
No, Sean, you don't have to report by Monday. That was you.
What? No. Oh, you'll go back and amend, and you'll probably need help with it because payroll tax returns can be a little bit of a pain.
All right, so the question is, if our receipts are 20% below in the 4th of 2020 versus the 4th of 2019, we automatically qualify. Yes, that's correct. Then if we do qualify, we just notify our payroll company before the next payroll. No, that's not correct.
They're not ready.
Yeah.
None of the payroll companies are ready for this. They're just not. So soon.
So you go back and look at the chart we had where it tells you how much you get per employee. So you can take 50% of the wages or 70% of the wages as a credit up to $10,000 for a quarter. So you need to make the computation of what that credit's going to be, and then you need to submit that to your payroll company. And what Kristen is saying is probably going to happen, at least for this week, next week, and the week after. The payroll companies are not ready for this. They'll have to get ready. So if you submit credit forms and I just think they're not going to be ready for it. But if you compute the credit and you're on the ball and you put your next payroll in tomorrow, then they should give you that credit. Yes.
One major concern I have is at least one payroll provider is saying if you're going to be using the PPP wages and the ERC wages, they cannot do it for you because they can't allocate the wages like that. So you're going to have to do it independently if you take out another PPP loan. I hope that changes.
All right, so the last question that we have right now anyway is we spent our PPP money over 8 weeks before it was added to use over the longer period. Do we need to file for forgiveness 10 months after the end of the 8-week period?
Yes.
if you're going to elect the 8-week period for your forgiveness period, the answer is yes. If you're going to elect the 24-week period, even though you used it over 8 weeks, your application is due 10 months after the end of the 24-week period. Where do we get Form 7200? You can print that, go to irs.gov forms and just type in there for the search, Form 7200. And you can print it yourself.
Right now, it hasn't been updated since June. They need to release a new one. You cannot use the one that's there now. It's not ready. Crap, I sent my questions in the chat. All right, let's check it. There's quite a bit, actually. Oh, boy.
Just for you.
Nobody read that slide, huh?
Yeah.
Okay, I'm just starting from the top, I guess.
All right, we got a lot of questions in.
Oh, you two look fantastic.
All right.
Thank you.
Attendees
are not on video.
No, attendees aren't. All right, 25% of my business sells to meeting rooms, and meeting rooms were closed. So that arm of my business was closed as long as the buildings were closed. Do we qualify? Great question, and if you were an aggressive taxpayer, you might take an aggressive stance. If you don't meet the receipts test, the only way you would qualify is if you were shut down by a government statute. That's going to be a decision that you have to make. You were not shut down by a government statute, but you weren't able to do your work because of a shutdown. Now, there is a definition in there that if you're in business and your suppliers were shut down, then you could qualify for being shut down. This is a little opposite here.
She might have a travel one too, if people travel to those meetings, if travel was limited.
If travel was a part of that, you could qualify, but you still got to meet the government shutdown.
I think that situation is a conversation with a lot of information.
She looks at text.
Okay.
Can we get a PDF of this chart? Yes, we can send that.
If you go to BrinkerSimpsonCares.com, it'll be up there by the end of the day with a recording.
The website is up there. For nonprofits, this gross receipts include temporarily restricted conditional grants.
They do give it's that one that is the same definition actually for them that they're using for PPP. They reference that.
I'm not sure what the definition, or I'm not sure what the answer is to that question.
Yes, me either.
We're not sure, but if you would email us, we'll find that answer out for you, how the restricted grants work.
That answer is available. I just don't know it at the moment.
Better to take the 941 back from the payroll service or do it yourself and have the CPA do it. You're going to have to, if you're using a payroll service, you've got to go through the payroll service.
I don't think they're going to do them. We may have to do them as CPA. I think CPAs are going to be doing 941s and not be happy about it.
All right, we'll see what happens with that.
It's not fun.
All right, we already answered that one. What's the purpose for delaying PPP forgiveness applications? Just what we went through today on the ERC. You could qualify for both. You don't want to use too much payroll to go, too much payroll for your PPP application forgiveness, because some of that payroll could get you a tax credit. Gross receipts equals GAAP revenue, not necessarily. Gross receipts equals the normal way that you record your business. So cash basis income is not GAAP, but it could be the normal way that you do the work.
I did have funny names up there, and Bob told me to take them out. So
even if not mandated to close, if your business had a 50% decline in revenue, you get ERC. Correct. That's the 2020 50% decline. It's 20% for 2021.
And you basically get 2 quarters.
It is a government party. Take the money. Yes. Yes. Keep scrolling.
Your Brinker CPA can help you.
If you paid your wages with PPP loan proceeds, do you still receive ERC on the same wages? The answer is no. You can't use the same wages for both. So you can pay your wages with anything, but if you use those wages for forgiveness, you can't use them to get the ERC.
Or FFCRA paid leave.
Yes.
Not that, as people use that more.
Client was eligible for the 4th quarter ERC. Do you know how? Okay, we already answered that one. Thank you, Ellen. Good to see you. Nice coordination of outfits. How would you test Q2 of 2021 for revenue?
That's why they elect the prior quarter. That's why.
Yeah, that's why they're allowing you to go back to 2019 versus 2020 in the fourth quarter, because your test for Q2 is going to happen after June 30th when the program expires. That's all going to be determined with follow-ups, I'm sure. But right now, just use that fourth quarter of 2020 over the fourth quarter of 2019.
That's good for him.
Okay, thank you. We have a guy making 36.5. Do we bump him up to 40? It's up to you. You get more credit. The credit form is form 7200. That's the only form you need for this.
That's the last one.
My office was closed and we went virtual. Is that closed? If the government closed your office, yes. If you closed your office, no.
And if half of your people were not able to do their job, then
Right.
Definitely. But otherwise, the telework thing is a thing we need to have a conversation about and document all the circumstances. It's similar to doing an R&D calculation at this point.
Yes.
To get a lot of information.
All right, that's it. I think we have 2 in the Q&A. We're going to answer these 2 and then we're shutting down. It's lunchtime. Fourth quarter 2019 to fourth quarter 2020 down 49%. So not eligible. Fourth quarter 19 was 49% lower than the 2020. If that's the case, then no, your business is booming. So you're not eligible according to that computation. All right, now, if you think your 2021 first quarter is going to be 20% lower than the first quarter of 2019, you have to go back 2 years. If you believe that this quarter is going to be 20% below 2019, then you're eligible for the credit. But you must be 20% below when it comes out, or you're going to have to give that money back. It was higher in 2019. Then you're not eligible based on that computation, correct?
Right, then she would be. She's saying she was higher in 2019. So
I'm
down
sorry.
by 49.
So 2019 is higher than 2020. Yes, you have a decline of 49%. You're eligible for the first quarter of 2021. Yes.
If you think you could get the credit, you can get a maximum of your 70% of your average quarterly wages for 2019 on Form 7200 when it's available.
Yep. Yes, both years are being compared to 2019. That's a good point. That when you do the computation to figure out for 2020, you're comparing the 2020 fourth quarter to the 2019 fourth quarter. When you compare the quarters of 2021, you're comparing them to 2019. So the government wants to see a decline in 2021 over the full business year when you were in business in 2019. You've already experienced a decline in 2020. They want to see a decline as to the normal business.
And if you are a new business, there are some rules just
Yes.
like PPP, but there's so much information I didn't include that.
All right. Thanks, everybody. We answered 80 questions live. That's awesome.
Check the website later.
Yeah.
We'll have the slides up there.
And please email us to the email that's on the board right there if you have any questions, and we'll get to them very quickly. Thanks again. Good luck to everybody. And
one other thing. Fill out the survey and let us know what types of webinars you'd like to see in the future. There you go.
Yeah, there's a survey.
At the end.
Survey at the end. Thank you very much. Have a great day.
All right.